Victor, we've been in the teardown business a long time, right? And we brought into to Aeras to actually manage and go to different engine models. So, in your opinion, in our business, why do teardowns matter?
Well, if you're recuperating the financial investment, they do matter in the sense that you're going to tear down the engines and monetize all the material that you end up getting from it.
So that's yeah. So you led into finance, which we have the expert here, Phil. So Phil, tell us, you're when you invest in engines or aircraft and consign them to an Aeras or a company, what do you actually look for?
I think usually it depends on the life of the engine. So, you know, if you have a full life engine, your avenue is you're putting it on lease, you're operating the engine, getting as much cash flow out of it. If you have a midlife engine, you're in this dynamic where you could repair the engine, put it back on wing, or if it's beyond economic repair, meaning the margin isn't there, you shift to the part out model. So ultimately, it's driven by what's the value versus the repair capex involved to bring it back to a serviceable engine.
So when you actually finance the asset and you model it, are you looking more for cash flow, profit, both? What's the trigger points, in your world?
Everyone's different. I would say for us, the most important number for us is IRR, which effectively is it's your cash flow over a certain period of time and what is that discounted rate back to you. So for example, if you have to spend $1 million day one and it's going to take you multiple years of recovery, that's going to be a much lower IRR than an investment model where, in your case with a part out, you start having incoming cash flow within month, what, 4, 5, 6. So it really just depends when is your liquidity event. If you do a repair and flip model versus part out where you have monthly consistent cash flow.
Are you constrained by time? You mentioned IR, but um, do your investors or your partners, they want to be out of a certain investment in a certain amount of time, or is it just that
Yeah.
return? If it comes over 2 years, would they rather have all the money back in 1 year? What?
It depends on the investor. There are some investors that are more patient where they care about what is the multiple on their invested capital. You have other investors that really care about consistent cash flow, even if it means the shorter deal, you may have a smaller return on investment, but it's de-risked from the perspective of you're not putting money into something and hoping in 3 or 5 years you get your money out of it.
Uh, on the financial part of it, let's say we usually model teardowns an average of 2 years. If it gets to the 2 year mark, um, do the investors get a little nervous when they're not monetizing or getting their returns on that? And do they actually just want to sit there and kind of want you to sell the rest of it and recoup that
Yeah,
money?
it's a great question. I think it's ultimately driven by how has the project performed over those 2 years. When we partner bidding on an asset, we have a very complex model that models out the value of each part, the timeline for teardown, repair, and sales. And so if we're generally tracking that model, by the end of year two, in theory, you've got most of the value out of the engine. You've already been paid out, and whatever's left, that's you generally work that out with the consignment partner to say, hey, what's left? How long is it going to take to sell? Um, if it's been underperforming for the entire time, then yes, people might get worried. But I mean, at that point, as you guys know, once it goes through repair or inspection, you have a pretty good understanding on how the project's going to perform.
So that leads to the next part of the process, right? So we've invested in the engine, we've secured it, you've consigned it, hopefully to Aeras, of course. Then it goes, to Victor to manage it under his team operations. So give us an idea of the process of, after Phil, acquires the asset and turns it over to Aeras, what's the Aeras process? And actually probably it's same model as others in our similar business, but what is that process?
Well, one of the first things is to actually get all the paperwork documentation for the engine and have that all ready. And then put down a work scope that you want that particular teardown shop to follow. usually you have to highlight the hot parts, material that you want to be able to sell and get out of those engines and monetize that as soon as possible. Um, Once you have that work scope and the engine's inducted, then it's just a matter of managing it with the teardown facility and acting on all the parts that you want to get out first, and then start to get the additional material in, and then getting it onto repair is the second part, which is a tedious part, but because there's so many parts on the engine, getting everything out to repair is very, very crucial, and to be able to get it on a timely manner, and then eventually get the material back so that sales have it available for sales.
So you mentioned documentation, and it's very important. So how do you manage that?
At point of purchase, we already obtain all the documentation for that engine, commercial trace, back to birth on the LLPs. So all of that is already gathered. Then it's just a matter of presenting the commercial trace and the back to birth to the teardown shops, and then putting all the documentation with those individual parts to get them out for repair.
So Aeras has evolved and diversified. You had different locations in Dubai and in Wales and now in Miami. So where is all that managed? As far as documentation, the teardowns, and then actually the repair management and the sales management.
So our repairs and technical records is over in the UK, in the Wales office. The product line is situated over in Miami, and they work in conjunction in managing all the teardowns and getting all the material out for repair. The product line works very, very closely with the salespeople in order to get the material out for certain shops that sometimes you have certain requirements by certain customers.
So to make Phil happy, and again on his investment, and I'm sure you monitor the reports. Well, there has to be a report out, and you monitor that. How do you manage that portion?
So all the sales are recorded in our ERP system, and all of that is followed by the product line, and they put essentially a consignment report on a monthly basis that we can report out to the investor.
So Phil, when you actually get the sales information or the reports, and if you see something that doesn't look accurate or maybe doesn't look as we modeled, what are the steps on your side, to try to answer the questions or whatever?
Yeah, so as part of your monthly report out, let's call it, we generally take that information, we flow it through our own underwriting model that we started with when we initially raised the capital. And then it's just a function of every month right sizing it. Are the yields coming in better? Is there higher scrap rates? How's pricing looking versus what we expected? And it's a process. It's fluid. It changes month to month. But generally, we get a pretty good understanding of how the project's going to perform once, I'd call it month 6 or 7. Once the engine's been disassembled, parts have been routed out, and sales start coming in. That's generally when you've got a good sense on how the project's going to perform.
Good. So what's the biggest challenge? Both of you really. So what's your biggest challenge, in this whole process from when it's actually turned over to you to, the end of the program basically?
I think time is essential to be able to tear down that engine quickly and then get that material out for repair. Because it's not only the challenge in time, but also in the market. Sometimes the market changes. So there is particular components, particular parts that may have a higher value, and then the market changes, and all of a sudden that part has a lower value. So you want to be able to get all that material out into repair and then out into sales and monetize your investment.
So what about repair turn time on components?
That is a very high challenge because you're depending on a vendor to get that material repaired. And you can always push them, but it's always at the end result is the vendor that ultimately decides when that material is going to be ready for repair.
What about you, Phil? What do you feel the biggest challenges in any project that?
When we consign an engine, you're truly at the mercy of your consignment partner's expertise. So you have to pick the best team with the right infrastructure, the right sales team, all all the steps you mentioned earlier. I would say for us, where we can get in trouble is the initial underwriting, where we're too aggressive on our assumptions. We think yield rates are going to be much better, or pricing is going to be much better, and even the timeline to some extent. And a lot of those things we don't have control over. So for us, it's making sure we're very conservative on the price we pay for the engine, not chasing engines just to get more engines, but making sure we account for a lot of the risk and landmines that you can step in. But at the end of the day, it's all on the buy price.
Got it. Well, appreciate it. Good job.
Thank you.
Talk to you.